Oh my God, thank God it's Friday. Whew, it's been a tiring week. MBS were down early, down a whole 81 basis points on the 5.5 real early this morning. 10-year was up 7 basis points. S&P 500 contracts pushed lower, signaling the U.S. equity benchmark may wipe out the early week rally. We got non-farm payrolls came in at 263,000 on a forecast of 200,000. So jobs are staying strong. It was 284,000 previous. Wages went up 0.6% versus 0.3 expected. So people are making more money so they can buy more stuff. It was 0.5 previously. Year over year, it is up 5.1% on an estimate of 4.6. Unemployment rate came in at 3.7 versus a forecast of 3.7. Not only are we dealing with stronger headline job creation, but perhaps more damaging is wage growth exploded month over month. Why damaging? Because Chairman Powell had mentioned the importance of wages in the speech just 2 days ago. So now that wages are still going up, it might give them ammo to do the 3/4 basis points here the week after next. Further analysis of the job report, though, showed some contradictions. There's some weird stuff in there. 23,000 negative revision to September and October, which wouldn't be in the report. The other contradictions are versus the ADP. So the ADP report has stats from about 25 million companies and sources versus the BLS, which came in today, which is based off of modeling and surveys. The BLS says that manufacturing went up by 14,000 jobs. ADP said it went down 100,000 jobs. BLS says that construction went up 20,000 jobs. ADP said it went down 2. And then somehow with all of this, the unemployment rate didn't change, which seems weird. And then you dig in, you find out 186,000 people left the labor force. I mean, they had to go somewhere. So there might just be a big flaw in the methodology of this. I've never been a big fan of the BLS. And then the ADP formulation is really new. So it's hard to tell which one of these is correct, but it definitely adds a lot of murkiness to what's going on. The Atlanta Fed also trimmed their GDP now estimate to 2.8% from 4.3 in the last model run. They are changing this thing so often lately. I guess if you predict every number possible, you'll be right at some point. God, I don't know. That thing is crazy lately. November gross issuance of all mortgage-backed securities came in to just $82 billion. That's down 14% from the previous month. This is the lowest monthly tally seen since March of 2019 and the eighth monthly decline in a row, according to Bloomberg. Last month's supply comes to just 65% of what we were experiencing at this point last year. Although we did get a rally, and at the end of the day, it ended up being up 8 basis points, and the Treasury was down 3, which puts us back in the middle of this big fat range with a ceiling at 102.788, the floor at the 100-day moving average at 101.017. Next week is going to be an interesting one to see how this plays out. There's going to be a lot of prognosticating on what the Fed is going to do. Our mortgage industry insight. Non-QM, is it sweeping the nation and profitable? Maybe, maybe not. Angel Oak did not have a good month. Angel Oak Mortgage, the publicly traded non-QM REIT, disclosed in a public filing that it sold $343 million worth of mortgages for just $284 million, or 83 cents on the dollar. Now keep in mind, you're supposed to sell mortgages for over the face value. That's how we make money. So 83 cents on the dollar is pretty terrible. But the thing is the average coupon on these loans was 4.5%. So that's way below market, even for conforming loans of higher credit quality. So there's a reason for it, but that's a big hit to the balance sheet. Then also in securitization news, JP Morgan Chase is set to issue its first non-prime MBS stocked exclusively with investment property loans underwritten using the DSCR. According to the presale report from Kroll Bond Agency, it is secured by 980 loans were originated by more than 100 letters led by Sprout. So apparently they bought a whole bunch of Sprout's old loans and they're selling them off, as well as InterFirst Mortgage, which is 11% of it. JP Morgan will provide representation and warranty coverage on the loans originated by Sprout, given they are no longer in business. Which makes us look at next week. So we have some news, not a terribly active week. Friday is going to be the big day. We're going to get a little bit of activity on Monday when we get the ISM numbers, which is a stat that's going to go in to try to get people to help predict what is coming on Friday, which is going to help predict what is coming the following week. Jobless claims will come on Thursday because the job stuff is all over the place, and the Fed has two mandates, that being keeping people employed, keeping jobs high, and lowering inflation. So Thursday and Friday are the two big reports on that. Then we're going to get the core producer prices, as well as 1-year inflation outlook and consumer sentiment on Friday. So those are going to be the big report that everybody's going to be looking at. Hope you have a great weekend. If you have some time, check out our common sources and influences, especially our sponsor at WellThatMakesSense.com. Had some great posts this week, so check it out. Have a great weekend.